Treasury, Federal Reserve, and the FDIC released joint statement mapping out approach to Silicon Valley bank collapse. Regulators rushed Friday to seize the assets of one of Silicon Valley's top banks. Let's dive into the details, shall we? Depositors of the Silicon Valley Bank have access to all of their money following the bank's failure on Friday, at no loss to American taxpayers. The Treasury Department, Federal Reserve, and the Federal Deposit Insurance Corporation, FDIC, said in a joint statement on Sunday. Today, we are taking decisive action to protect the U.S. economy by strengthening public confidence in our banking system, the joint statement read. This step will ensure that the U.S. banking system continues to perform its vital roles of protecting deposits and providing access to credit to households and businesses in a manner that promotes strong and sustainable economic growth. The statement said Treasury Secretary Janet L. Yellen had approved actions enabling the FDIC to complete its resolution of SVB in a manner that fully protects depositors. Depositors will have access to all of their money starting Monday, March 13th. The taxpayer will bear no losses associated with the resolution of SVB. Notably, the regulator's statement also announced the shutdown of New York-based Signature Bank. We are also announcing a similar systematic risk exception for Signature Bank in New York, which was closed today by its state chartering authority, the joint statement read. Any losses to the Deposit Insurance Fund to support uninsured depositors will be recovered by a special assessment on banks as required by law. The Federal Reserve said it would make additional funding available to eligible depository institutions to help assure banks have the ability to meet the needs of all their depositors. The U.S. banking system remains resilient and on a solid foundation, a large part due to the reforms that were made after the financial crisis that ensured that ensured better safeguards for the banking industry, the regulator said. Those reforms, combined with today's actions, demonstrate our commitment to take the necessary steps to ensure that depositors' savings remain safe. Silicon Valley Bank, the nation's 16th largest bank, failed Friday after depositors hurried to withdraw money this week amid anxiety over the bank's health. It was the second biggest bank failure in U.S. history after the collapse of Washington Mutual in 2008. Yeah, I have questions if they say like the banking system remains resilient and everything. It's I don't know. I think it's just going to keep getting worse. I think this is just the beginning. It's interesting that this usually, I don't know. Yeah. So, yeah, I guess we'll see what happens. Yeah. But yeah, so I think it's going to get worse, but that's just my opinion. But what's your opinion? Please let me know in the comments below. Also, be sure to smash that like button, subscribe to the channel for daily news updates, hit that notification bell, and share this video to spread the news. Thank you so much for watching. I'll catch you in the next one. Peace.